Minnesota-based firm Seton, Peters & Revenue. They dedicate their practice exclusively to advising and representing employers in labor and employment matters. They do have a nationwide practice and with a wide range of client bases. Now, Caitlin practices in the area of employee benefits and employment law, and she spends the majority of her time focusing on advising employers on compliance issues related to the Patient Protection and Affordable Care Act. And she also helps employers design and implement employee benefit plans, maintain ERISA-compliant employee benefit plans, and advises employers on policy development. So that's why I am working with Caitlin, and she's going to help us all kind of deal with this. And with that, I will let you go, Caitlin.
All right, thank you, Kelly. Thank you for that wonderful introduction, and thank you to everyone at More Benefits for putting together today's webinar and this series of webinars. We do have a lot of information to cover today, but I want to make sure to leave a little bit of time at the end for Kelly to talk about how More Benefits is going to help all of their clients comply with these new reporting requirements. And with that being said, let's go ahead and get started. If you have any questions, feel free to send Kelly a chat or send me a follow-up email or Kelly a follow-up email. Kelly will also have a copy of the PowerPoint slides so you can get them at the end of the presentation as well. And then you'll see my email and Kelly's email and contact information on the last slide. So if you didn't get it there on the first slide, you can see it again. And if you have attended our first two webinars in this series, we've sort of been building up to today's webinar, sort of reviewing some of the things that have been around for a while, the pay versus play employer mandate rule, how to track employees using the look-back measurement method. And today we are talking exclusively about the new reporting requirements that come into effect. Basically, you have to report the information in 2016, but you are reporting about the 2015 calendar year. I'm going to say this multiple times throughout this presentation. The reporting is based on the calendar year. Doesn't matter if your benefits run on a non-calendar plan year, doesn't matter if your benefits start on a July 1st date, doesn't matter. You are going to report about the calendar year. With these new reporting requirements, you need to tell the IRS information about your plans, about the type of coverage you offer, but you also need to give certain information to all your full-time employees so they can correctly report to the IRS if they were offered coverage, if they had coverage, when they had coverage, and we'll go, obviously, into more detail about all of that. Just a little bit of background. In March 2014, the IRS finalized these rules and requirements. Originally, they were required in 2015 about the 2014 plan year, but that was delayed because the employer mandate penalty was delayed. And these two requirements are very closely intertwined. And with that being said, I want to make another important point that in order to correctly fill out all of these new forms and avoid the penalties associated with the employer mandate and these new forms, you're going to need to be very, very familiar with the employer mandate, also called pay versus play, terms and rules. There are a lot of definitions in the employer mandate that also apply terms and definitions. They're all the same in the IRS reporting forms. And so you have to be very familiar with what we're discussing. We spent a lot of time in the first two webinars about what is the large employer, what is minimum essential coverage, what is minimum value, what is affordability. All of that information, all of those definitions also apply to these new reporting forms. Additionally, there's a lot of information talking about the transition relief. And if you are using any type of transition relief under the employer mandate rules, you're going to need to know what transition relief you're using in order to correctly report on these forms. And we'll, again, go into that in a little more detail as we go through. Also, one other thing to note is that there are two different reporting requirements. There's the reporting requirements for employers, and then there's the reporting requirements for issuers of minimum essential coverage. So that's going to be the insurance carrier for your fully insured plans. But for those employers that have a self-insured major medical plan, you are going to have some additional reporting requirements regardless of your size because you are considered an issuer of minimum essential coverage. Now, we talk about self-insured major medical plans. We're not talking about cafeteria plans, premium-only plans, HRAs, FSAs, HSAs. We're talking about a major medical self-insured plan. So keep that in mind that today we're focusing on the employer reporting and not the issuer of minimum essential coverage reporting. So, nice little segue into who must report. Who are we talking about? We are talking about large employers. If you remember back to that first webinar, we talked about the definition of large employer. A large employer, as defined in the employer mandate, is 50 or more full-time employees plus full-time equivalent employees during the last calendar year. Now, yes, we all understand that for 2015, that employers with 50 to 99 full-time plus full-time employee equivalents are not being penalized if they don't offer coverage, but you still have to report. You are still considered a large employer. You still fall under that definition. You might not be penalized for not offering coverage, but you still have to report. This is the #1 reason why definitions are so important and correctly filling out these forms is because the definition of large employer has not changed, even though certain large employers are not penalized in 2015. So for those of you on the call here, maybe you fall into that 50 to 99 full-time plus full-time employee equivalent. That's great. You're not penalized if you don't offer coverage to your full-time employees. Everyone should be aware of that. Everyone's on board with that. The IRS knows that. You're not going to be penalized. But you still have to fill out these forms. And you will be penalized if you don't fill them out. So this is why it's very important to understand definitions. So it's the exact same definition as the employer mandate. Keep in mind that it's based on the previous calendar year's workforce. And so we're talking about in 2014, did you have 50 or more full-time plus full-time employee equivalents? Again, another reason why it's so important to know your size. Know your size. Know how to correctly calculate your size. Also, we're talking about all large employers. That includes nonprofit entities. It includes government entities. This applies to everyone. One of the frequently asked questions that I have been getting lately is what happens if your workforce levels drop below 50 in 2015. So say you start out 2015 with 55 full-time, but then it drops down to 45. What do you do? Well, keep in mind that your size is locked in for the entire calendar year. In order to determine your size for 2015, you look back at your 2014 numbers, and that determines your size for all of 2015. The average amount of full-time plus full-time employee equivalents in 2015 is going to determine your size for 2016, and that size is going to be locked in for the entire 2016 calendar year. Also, one other sort of interesting little tidbit, if you don't have any full-time employees, you don't have to report this information. In theory, you could be a large employer with no full-time employees. You could have over 50 full-time employee equivalents, technically be considered a large employer. I have never seen that actually happen in real life, but in theory, it could, and those employers don't have to report. As the series has been going on, we talked a little bit about controlled groups. Controlled groups are taken into consideration in determining whether or not you're a large employer, and also play a big role in filling out these forms. So each member of the controlled group must fill out their own form, but there are lots of questions on the form about the other members of your controlled group. You're going to need to know the names, the tax identification numbers. You're going to need to know all of this information about the other members in your controlled group if you're part of a controlled group. And so this is more of a, hey, heads up, make sure you know if you're part of a controlled group. Again, these rules are not new. The controlled group rules, IRC 414 B, C, M, and O, are not new. They've been around for a while. Ask your tax advisor, ask your attorney, something like that. They can help you figure out if you're part of a controlled group. Basically, we're looking at other related entities that have the same owners. And you're going to want to start talking with the other members of your controlled group to coordinate how you're going to do the reporting, make sure everyone has a contact at the other control group members, you know who to call if you can't remember their tax ID number or things like that. Moving on, let's talk about what information needs to be reported to the IRS and gathered by you, the employer. We're going to start with the easier stuff, all the employer information. Things like the name, your address, your EIN/TIN. You're going to need a name and phone number of a contact person. This contact person is going to be responsible for answering any questions about the form if the IRS happens to call. So don't put Joe Schmo from Down and Shipping as a contact person unless he's going to be able to accurately answer any questions about the IRS and have the authority to talk to the IRS on your behalf. So just make sure you pick a contact person that sort of knows what's going on with the form. The year that it relates, you're going to need to report each calendar month whether you guys offered full-time employees and their dependents the chance to enroll in minimum essential coverage that was minimum value. Remember minimum value definition from 2 webinars ago? You're going to need to know.
Not to worry about minimum value. I just wanted to jump in there. Every plan that you guys have that this employer sells right now has a minimum value and is minimum essential coverage. It's just those mini-med plans and other plans like that that wouldn't qualify.
And there you go. You guys are set. You've got the check on minimum essential coverage, check on minimum value. You're going to need to know, like I mentioned earlier, if you're utilizing any employer mandate transition relief. Also, you're going to need to know the number of full-time employees you have each calendar month during the year. Now, this is the ACA definition of full-time employee, those employees working 30 or more hours a week or 130 hours or more per month. And this also includes employees identified as full-time employees by the look-back measurement method. So the last webinar we talked about the look-back measurement method. So when we're talking about full-time employees for reporting purposes, that's going to include all those employees in a stability period that are considered full-time in that stability period. So you're looking at your true full-time employees, also all your employees that you're treating as full-time who are in a stability period. Then also you're going to need to know the total number of employees each month. Full-time, part-time, seasonal, interns, all the employees for each calendar month. Obviously that can be a little difficult to determine how many employees you have each month. So there are 4 different ways you can do it. You can do it based on the first day of each month, the last day of each month, the first day of the first payroll period that begins each month, or the last day of the last payroll period each month. Once you pick a way to determine how many employees you have each month, you should stick with that way for the other 11 months of the year. Don't switch between the 4 ways to determine the number of employees. So pick one, whichever is easiest for your organization, but pick one and stick with it. And then lastly, you're going to need to know the total number of Form 1095-C. We will take a look at Form 1095-C, and I will explain what Form 1095-C is in a little bit, but basically that is the form that you fill out for each full-time employee. And so in theory, the number of full-time employees each calendar month should basically be the same as the total number of Form 1095-Cs you're filling out, but just know that you also are going to need to know the total number of Form 1095-C.
Yeah,
we'll take a look at the form.
Yeah. Oh, I'm sorry. So like if you have some turnover during the year, you may have a lot more 1095-Cs at the end of the year, just like W-2s, than what you have as the total number of active full-time employees at the end of the year.
Correct. That is correct. And don't worry, we will talk about what the Form 1095-C is and what it looks like in a little bit. Now let's talk about the information you need to know about your employee, because you're going to be reporting all of this information about each employee as well. And when we talk about each employee, we're talking about each full-time employee. Again, that's the ACA definition of full-time, 30 hours a week, 130 hours a month. and those employees treated as full-time in the stability period. So you're going to want name, address, social security number / taxpayer ID, the calendar months that they were covered under the plan, if they were covered under the plan. This gets a little bit tricky because an offer of coverage / the employee is only considered covered under a plan if they are covered for every day in that month. For example, if the employee is offered coverage on July 10th, they did not receive an offer of coverage and they are not covered for the month of July because they were not offered coverage / they did not have coverage for the entire month of July. This is because the form is broken out by calendar months and the IRS doesn't want you writing in specific dates for each calendar month, and so it only counts if the employee is covered for the entire calendar month. Unless the employee was terminated, then you put in a special indicator code and move on. But just know that when you're collecting information, it's important to collect the exact date that the employee was offered coverage or enrolled in coverage, because that means the employee may not be covered for the entire month and you don't report that employee as covered for that month. So when you are collecting information, collect exact dates as you go through this. Also, you're going to need, oh, well, there you go. You're also going to need to know each employee's share of the lowest cost monthly premium for self-only coverage for each calendar month. So let's break that down a little bit. This piece of information relates to the affordability. The IRS needs to know if you offered this employee affordable coverage. Now remember, affordable coverage is 9.5% of self-only coverage, and employees can choose more expensive coverage. They can choose to enroll in family coverage. They can choose a richer plan where they have to pay more than that 9.5%. You as the employer are only required to offer them affordable self-only minimum value, minimum essential coverage. So don't report what the employee pays each month. That might not be the lowest cost option for them. They might have picked a family plan. They might have picked more expensive coverage. And so this is not simply reporting what the employee pays each month. You have to know for this specific employee what was the lowest cost option for self-only coverage for each calendar month. Now again, this calendar month thing relates back to you're reporting about the calendar year, which means if you have a non-calendar year, the cost might change mid-year because you switched to a new plan, you renewed, it's July, and now your new plan year starts, therefore there's a slightly different cost. So make sure you keep that in mind when reporting each calendar month the lowest cost option for self-only coverage. It might change.
Again, that's something that we're going to be tracking for our clients. So so don't worry so much about it. You know, we'll get through this, and then I want to show you a little bit what we're tracking for you guys, so it'll be easier to report this.
That's super, super helpful to have. Not everyone has those resources available to help them through this. Also, another thing about affordability, you're going to need to know the safe harbor that you use to determine affordability. We talked about this during the first webinar. There's the W-2 method, the rate of pay method, the federal poverty line method. So just have an idea of how you determine affordable coverage and which safe harbor you use, because you will actually need to report about that. Let's move on. So there are some indicator codes that you can use, that you will use when filling out the form to indicate what type of coverage you're offering, who you're offering the coverage to, things like that. I just want you to be aware that there are these indicator codes. They are more important if you are actually filling out the form yourself. And it's more of a, hey, if you are going to fill out the form yourself, make sure you read the instructions and make sure you understand the definitions and the type of coverage you offer. If you have help filling out the form, or if someone else is going to fill out the form for you, it's less important that you are aware of the indicator codes and less important that you understand what they are. But I just wanted to draw your attention that they are there to help sort of streamline some of the types of information that's going to be on the form. And then, again, with the last part, the employer mandate transition relief, there's a variety of different transition relief or safe harbors that you can use for affordability if you are in a multi-employer plan, if you are utilizing the non-calendar plan year transition relief, things like that. So just keep in mind that you will need to know this information, or whoever is filling out the form for you will need to know this information. And so just be aware if you need to brush up on some of your terminology or talk to a variety of different of your advisors or broker, things like that, to see what transition relief or safe harbor you are using so you can correctly report that. And do not report. There's some information that you do not have to report. Yay. So you don't have to guess if you're going to be a large employer next year. These are things that people anticipated maybe employers would have to report about, but the IRS said, nope, we don't need this information. So you don't need to tell them if you think you're going to be a large employer next year. You don't need to report specific information about the look-back measurement method. You don't need to tell them what your initial measurement period was. You don't need to tell them what your stability period is. You don't need to tell them if you use an administrative period, which is really nice. And so you don't have to report that. You do not need to report information about employees in a limited non-assessment period. This is a new defined term, and it's basically that time frame when an employee won't trigger an employer mandate penalty. This is defined very explicitly in the instructions, and it's like the first month an employee is hired. It's the waiting period that coincides with the first 3 months a new full-time employee was hired and they don't trigger a penalty. It is the initial measurement period is the big one, because these employees in the initial measurement period are employees that you don't know if are full-time or part-time. You can assume they're not full-time yet because you're still measuring them. Therefore, you don't need to report about them. It's one of the other benefits of using a longer initial measurement period. It's a longer time. You don't have to report information about those employees. Where does this information get reported? So let's take a look at some of the forms. So here's a little breakdown of the citation to the Internal Revenue Code, actual statute, and that explains all this, and then the form numbers. So the Internal Revenue Code citation doesn't match up with the form numbers, and people refer to them using both. And so I just want you guys to have this little cheat sheet here. It's helpful when talking to other professionals, tax preparers, things like that, because people sometimes use 6056 to refer to this requirement. Sometimes they use the form numbers, 1094C, 1095C. So let me just quickly explain this chart. IRC 6056 is the employer reporting requirements. That's what we're talking about today. The employer reporting requirements actually are reported on 2 different forms. Form 1094C is all of the employer information. So those slides that when we looked at all the employer information, the contact person, the name, address, your affiliated employers and your controlled group, your tax identification number, how many full-time employees you have each month, how many total employees you have each month, that goes on the 1094C. It's basically the cover page or like the executive summary of your organization, and it serves as a cover page for all of the 1095C forms that come next. The 1095C forms are the forms you fill out for each full-time employee. Each full-time employee is going to have a 1095C that's going to have all that information, all that employee information, name, address, social security number, when they were offered coverage, when they had coverage, the lowest cost option, et cetera, et cetera. So you've got your cover page is the 1094C. Then you have all of the information about specific full-time employees on the 1095C coming next. Just for your reference, the IRC 6055 is that carrier information or issuers of minimum essential coverage. They also have the 2 forms, the 1094B and the 1095B sort of operate the same way, cover page, summary of information, and then individual information about participants.
And then, Kate,
so this is what it actually.
Oh, I'm sorry.
Oh, go ahead.
Sorry. On the 1090 on the B forms, on the one for right there, the 6055, that's for insurance carriers or self-insured, right?
Right. It's
Yeah.
but the major medical self-insured.
Yes.
And so I'll talk a little bit more about the combined reporting if you happen to fall into that group that you are a large employer, you self-insure a major medical plan, so you have to comply with both reporting requirements. There are some combined reporting things you can do, so you don't have to fill out all 4 of those forms. Yeah. But when we talk about major medical self-insured coverage, again, I just want to reiterate, that's not cafeteria plans, not FSAs, not dependent care, not HRAs, nothing like that. We're talking about a major medical self-insured plan. Yes. So this is what the 1094C, the employer form, looks like. This one says 2014 on it because it's the 2014 version. They haven't released the draft 2015 version yet, but it's expected to look exactly the same. So this is where you put in all that information about you yourself as the employer. You have to have a valid employer identification number, tax identification number, name, address, et cetera, et cetera. A couple things I want to point out to you. On line 18 there, that's where you put, it's sort of, that one gets lost a lot. That's where you put the total number of Form 1095C. It's sort of smushed in there, so I just want to make sure you know that that's there. The ALE member, it refers to an ALE member because it's assumed you're an applicable large employer as a member of a controlled group, so that's why that terminology gets there. There's also a second page to this form that I'm not going to show you that just gives you a bunch of room to report all of the other members of your controlled group, the names, addresses, tax identification number, et cetera. But it's basically just another page where you can put in that information. Also, I want to draw your attention to line 22, where you check if you are using any type of transition relief. That box C, section 4980H, is the employer mandate section. And so that's if you are, say, between 50 and 99 full-time plus full-time employee equivalents, you are utilizing some type of transition relief, so you want to check that box. Also, if you are over 99 full-time plus full-time equivalent, there is transition relief for the penalties, as in you get an 80 employee reduction rather than a 30. That refers back to information from the first webinar. You're going to want to check that box. Basically, everyone is going to be checking box C on this form. Oh, I guess I do have the second page. So this is the, I'm sorry, there's a third page about the other members of your controlled group. This is the second page to the 1094C. This is where you put in all of the information about how many total employees you had each month, how many full-time employees you had each month, what type of transition relief from the employer mandate you are utilizing. That's column E. You've got, did you offer minimum essential coverage for all 12 months, for maybe just some months? And so that's where all of that information about the number of employees, number of full-time employees, et cetera, get reported. And then the third page is where you have more information to put in other controlled group members. And here we have Form 1095C. This is fairly new. As you can see, it's a draft as of June 16, 2015. This is the draft of the 2015 version. It looks identical to the 2014 version, but just so you're totally up to date, this one is the newest, latest, and greatest. So this is the form that you fill out for every single full-time employee. You will see you put the employee information in Part 1. You've got name, social security number, address, etc. You're going to put information about you, the employer, name of the employer, address, tax identification number, etc. Then Part 2 is where the bulk of the information is going to go. Where they offered coverage in all 12 months or maybe just some of the months. You see all 12 calendar months laid out there. The dollar value for the employee's share of the lowest cost monthly premium for self-only coverage. You've got maybe the same amount applies to all 12 months, but again, if you have a non-calendar plan year, your plan year starts some other month than January, the cost might change throughout the 12 months you're reporting about here. And then you're going to want to put in the information relating to any type of safe harbor you're utilizing for the employer mandate, such as how you determine affordability. Do you use the W-2 method? Do you use the rate of pay method? Was the employee not enrolled or not an employee for that month? Maybe they started as an employee in June, and so you write January, February, March, April, May that they're not an employee. Maybe they only enrolled in coverage in certain months. Maybe they were in a waiting period in certain months. All these codes refer back to the indicator codes I sort of breezed through, but that's where you give the IRS the bulk of the information about this employee. These codes are super important. Again, this is only if you yourself are filling out the form. These codes are really important because the employee may not have technically an offer in coverage for the entire month of July. Back to our example, employee enrolled in the plan on July 10th. Technically, they're not enrolled in the plan in July. Technically, they were not offered coverage in July. And therefore, in order for the employer not to be penalized for that month for this full-time employee, you need to make sure the IRS has the right information via the right indicator code to know that the employee was in some type of non-penalty period. For example, this is the first month of their employment. They were hired that day. They were hired on July 10th. We offered them coverage that same day, and they enrolled in coverage that same day. But the IRS doesn't know that unless you tell them. And so that's why it's very important to understand all of the different types of indicator codes. Again, only if you're filling out this yourself. If you give the information to someone else to fill out, they will understand the indicator codes. But I just want to make sure you are familiar enough with the form to know why this information is so important. Also, sort of the downside of all these forms, you have to fill this out for every single full-time employee. Very important information, and it has to be specific to every full-time employee. And that's where the time-consuming reporting comes into play, because if you're a large employer, it's going to take a long time to fill out every single one of these forms. So that's why we encourage you to make sure you're collecting all the data now or have someone that is collecting the data for you. And so at least you can sort of start getting an idea. In theory, you could fill out the information already for January, February, March, April, and May. If you've collected it, if you have it, if you understand how to use it, you can get a head start on some of these forms so you don't have to do all of them at the beginning of 2016. I also want to draw your attention to Part 3. Super, super important because a lot of people get sort of scared or nervous about Part 3. That is because Part 3 asks for Social Security number and or date of birth for all covered individuals under the plan. So we're looking at dependents and spouses. That information is hard to come by. But you only fill out Part 3 if you are an employer providing major medical self-insured coverage. Part 3 is not for just the large employers who have fully insured coverage. Part 3 is part of that combined reporting that I mentioned a little bit earlier with the issuers of self-insured major medical coverage. And so if you are just reporting about your large employer, you have a fully insured plan, you're just reporting the large employer information, do not fill out Part 3. And it says that right there under Part 3. It says, if employer provided self-insured coverage, check the box and enter the information for each covered individual. It's another reason why it's important to read all of the instructions and the information on this form. But it is easy to miss, and it is easy to misunderstand. We are talking about major medical self-insured coverage here. And if you don't need to fill out that portion, you don't need the names of all the covered individuals. You don't need the Social Security numbers of your employees, spouses, or dependents. And so don't fill out Part 3 unless you are an issuer of major medical self-insured coverage. Okay. So again, basically just reiterating what I just said, if you have to do both reporting, you will do the combined reporting on the form 1095-C, and you won't have to fill out a 1095-B. Again, if you do not have to fill out the information for self-insured major medical plans, leave Part 3 blank. Leave blank. Leave it blank. I still get a lot of questions about that, so really wanted to hammer that home.
I think you did.
Good, good. How are we going to actually file these forms? If you have to file more than 250 forms, remember each employee form, each 1095-C counts as one. So if you have more than 250 full-time employees, you have to file the forms electronically. If you're smaller than that, you are encouraged to file the forms electronically. If you never have filed forms electronically with the IRS before, there are currently a lot of rules and regulations being released regarding how to electronically file, specifically these forms. And so if you are going to be filing these forms yourself, you should go ahead and start reviewing some of that information just so you can start familiarizing yourself with the process, so it's not such a big deal when you have to actually file this information. Now, we've talked about that we have to fill out these forms for each full-time employee. And that's important because the IRS needs the information, but also because the employees need the information. You have to give a copy of this form, or at least give them all of the information on the form. You don't have to actually give them a copy. You can format the information however you want. Most people are just giving the employees a copy of the Form 1095-C. You got to give that to the employee so they have the information, so they can report to the IRS on their tax returns the same information. And so you have to provide a copy of Form 1095-C or a substitute statement to all these full-time employees. Again, all full-time employees, whether they're enrolled in coverage or not, whether they were offered coverage or not, all full-time employees. You can generally provide this information the same way you provide the W-2s, and so you can mail it to the employee's last known address, you can hand deliver it. You can also provide it electronically. However, the employee has to consent to receive the information electronically, and the consent has to specifically reference this reporting requirements and explain the importance of this information. This information is very important. Employees need this information to correctly fill out their taxes. So you have to really hammer home the importance of this information when the employee is consenting to receiving it electronically. The takeaway of that is if you hand out other electronic consents, for example, if you hand out plan documents or do some ERISA distributions electronically, you can't just assume that electronic consent applies to these new IRS reporting forms. You're going to have to get a new consent form from the full-time employees you want to send this information electronically. Takeaway, if you want to send it electronically, you're going to have to get brand new consent from your full-time employees. Otherwise, mail it or hand deliver it. A couple other things I want to touch on. Again, this is more for those employers on the webinar that are going to be actually filling out the form themselves. If you're going to collect the data and give the data to someone else to fill out, knowing about the different reporting methods is not as important for you. But if you are going to fill out that form yourself, you should know that there are a couple different ways to report this information. And so there's the general reporting method, which basically you follow the instructions, fill out all the boxes on all the forms for all of the information that they ask for. Very, I don't want to say simple, but like fairly straightforward. Just fill in all the information they ask for. the IRS has developed what they call simplified reporting methods. If the employer offers specific certain types of coverage to certain people, and basically there's no way, or it's very unlikely, the employer is going to have to pay an employer mandate penalty. I would not rely on using any of the simplified methods because there's very strict criteria you have to meet in order to report using these simplified methods. And I don't think they're very simple, and I don't think they're very helpful. But I do want to make you aware of them. In the interest of time, I'm going to go through them fairly quickly. And so just know you will have the slides. It's got the information on it. If you have additional questions or you think you're going to be filling out the forms yourself and you want more information, feel free to give me a call, shoot me an email, and I can walk you through a more detailed explanation of these simplified reporting methods. Otherwise, I'm just going to give you a basic overview. So the qualifying offer method is considered a simplified method because you don't have to report all of the information month to month on each full-time employee's 1095-C. You basically use an indicator code saying, yep, I gave them a qualified offer for all 12 months of the year. That qualified offer means it's affordable based on certain criteria. I offered coverage to spouses, dependents. I went above and beyond the employer mandate requirements so far that it's considered a qualifying offer. I can just use an indicator code, and I don't have to report information month to month on each employee's form. It saves some time because, as you can see, or as you saw on the form, reporting information month to month, you know, it can get kind of tedious with putting in the cost of coverage each month and whether the employee was offered coverage, whether they enrolled in coverage. So you can say, yep, I gave them an offer, a qualifying offer for all 12 months, write in one indicator code, I'm done. And so in theory, it can save you some time, but a qualifying offer is a fairly strict criteria you have to meet in order to utilize it, which is why I don't think it's quite as helpful as some people would like. There's a 2015 qualifying offer method, and it's basically using a qualifying offer month to month. So instead of putting in, oh yeah, this, you know, in this month in January, the employee was offered coverage, they enrolled in coverage, it cost this month, or this much in January, you can just use the one indicator code. Instead of putting in 3 pieces of information, you can put in 1 piece of information that says, yep, I made a qualifying offer, therefore I don't need to put in the rest of the information. There's also the 98% offer method, which is helpful for employers that offer coverage to part-time employees and full-time employees. So like you went above and beyond your employer mandate requirements and you're offering coverage more widely. And because of that, you're not tracking who's full-time. You don't know. Some people are full-time, some people are part-time, but everybody gets coverage. And so it's more time-consuming for you to figure out who's full-time and report about them than it is for you to just report about all your employees and say, look, hey, I offered coverage to 98% of all these employees. I'm going to give you information about all of these employees. Some are part-time, some are full-time. I don't know which is which, but I offered them all coverage. And so it's helpful if you don't know who's full-time or who's part-time because you offer coverage to basically everyone. There's an example of this. You'll have the PowerPoint slides. You can sort of read it on your own time. Again, if you have additional questions, you're going to be filling out the forms yourself. Feel free to contact me, and I can explain this and walk you through this in a little more detail. But for now, I just want you to be aware that there are those options out there. However, I don't think they're actually that easy. I don't think they simplify things that much. But you can use them, and maybe they will be helpful for your entity. So we've talked about who has to report, what information gets reported, where it gets reported. Let's talk about when. When will we report this information? It's very similar to the W-2 reporting. You have to give the information to individuals. You have to give that Form 1095-C to all the full-time employees by January 31st. Heads up, January 31st, 2016 is a Sunday, so the form is due that Monday. You have to file the information with the IRS by February 28th or March 1st or March 31st if filed electronically. Again, I know I've been reiterating this throughout the webinar, but the timing does not change if you operate with a non-calendar plan year. Yes, everyone understands that it's a lot easier to collect information on a plan year basis, but the IRS doesn't really care. The IRS needs this information on a calendar year basis to apply the employer mandate penalties. Employees need this information on a calendar year basis in order to correctly file their taxes. Therefore, you have to collect the information on a calendar year basis in order to report correctly as well. And so just know that even if you have a non-calendar plan year, you still have to report based on a calendar year, which means you're going to have information from 2 different plan years. Could be the same, could be different, but just keep that in mind when you are filling out these forms. So why? Why do we have to report this information? Why do employers have to spend all this time collecting the data, filling out the forms, and sending it to the IRS? The IRS needs this information to enforce the employer mandate penalty. Basically, you as employers are self-policing and self-reporting to the IRS whether or not you should be penalized under the employer mandate. You are telling the IRS if you complied with the rules or not, which is basically how the IRS operates in general with tax rules. But a lot of employers are asking, how am I ever going to find out? If I don't play by these rules, how is anyone going to find out? Is it just a one-off chance that I get audited? How am I going to get penalized? It's because you're telling the IRS if you complied with the rules or not. And so that's how you're going to get penalized. That's how they're going to find out if you're complying with the rules. And that's why it's important to comply with the rules. Also, the IRS needs this information to work with the state exchanges to determine who's eligible for a premium tax credit. It is helpful to correctly give the IRS all this information about who you offered coverage to, so the IRS can talk to the state exchanges and say, yes, this person is eligible for a premium tax credit, or no, I don't care what that person said on their application. They were offered coverage by their employer. They are not eligible for a premium tax credit. This is important for employers because, remember, you only get a penalty if one of your full-time employees gets a premium tax credit. And so having that extra information that the IRS can use to help sort of crack down on any misinformation that the exchanges get from employees can be helpful for you in making sure that your employees don't get premium tax credits when they weren't eligible for one. And then the last piece is that you give this information to the employees and to the IRS. The employees use that information to fill out their tax returns, so the IRS knows if that individual, that full-time employee, had coverage, or if they need to pay the individual penalty because they didn't comply with the individual mandate. And so these reporting forms really tie together 3 big pieces of the whole Patient Protection and Affordable Care Act, which is why it's so important, but it's also why there's so much information that needs to get reported. Additionally, you will be penalized if you don't file these forms. This penalty is on top of any type of employer mandate penalty you might be assessed because you didn't offer the correct coverage to full-time employees. You will be specifically penalized for not filling out these returns. Basically, the penalty is $100 per failure, not to exceed $1.5 million. And remember, each full-time employee needs a Form 1095-C. Therefore, if you don't file for anyone, you could be penalized $100 per person, well, per full-time employee. And so that penalty can start adding up. Additionally, that $100 per failure can be applied on a gradual scale, like if you file late or if you file incorrect information, you can be penalized for not having all the required information, for providing incorrect information, or for filing late. And based on the circumstances, based on how long it takes you to correct it, etc., that $100 per failure can be applied on a scale. But just know that it could be up to $100 per failure. This is not to scare you too much, because for the first year, the IRS has stated that penalties are not going to be applied as long as you make a good faith effort to fill out the forms and send them in. So you're not going to be penalized if you accidentally miss some information or have some incorrect information, as long as you made a good faith effort. And so making sure you document your good faith effort in learning about these forms, like coming to today's webinar, can be helpful in showing that you made a good faith effort and knowing what information needs to be reported and that you tried to fill out the form, therefore avoiding any penalties this first year. Keep in mind, filing late is not a good faith effort. So whatever you do, file them on time. Filing late could result in a penalty because it's not a good faith effort in complying. So as sort of wrapping up my part of the presentation here, how should you be preparing for all of this information, for all of this reporting, for all of these new requirements? Start talking to people. While you as the employer are responsible for the reporting, you are going to be responsible for any penalties you get assessed because of the reporting. You can ask for help. You can contract with any third party to help with the reporting. Talk to your tax advisors, talk to Kelly, talk to an attorney, talk to someone that can help you with these forms, help you gather the data, help you understand what your responsibilities are, and can just help you fill out the form too. Keep in mind that you as the employer are always responsible if there's a penalty or a mistake, so make sure you review the forms and make sure you trust whoever is filling out the forms. Also keep in mind that there can only be one master form 1094-C. So if you have like multiple locations across the country and each location is working with their local broker on filling out the forms, make sure that all the information gets combined and there's that one cover page about the employer and not multiple cover pages. So just keep that in mind. A few other things, if there are any employers out there that have multi-employer plans who are union employers, there are additional guidelines for you, and so make sure you're talking with your plan administrator now to make sure everyone is on the same page, everyone's on board. You're going to have to work very, very closely with that plan in making sure that everyone gets the correct information, the forms get filled out, the forms get distributed to employees, and so start that conversation early, start that conversation now. Additionally, work with Kelly. Work with Kelly verifying the information, verifying that you know what your responsibilities are. In a couple of minutes here, she's going to talk about what she can do to help you fill out and gather this information. Talk to your tax advisor if they're going to actually fill out the form. Make sure they understand what's going on. Just know all the information you need to be collecting and make sure you understand the terminology that's getting used. The instructions to fill out the form are going to mean absolutely nothing to you unless you are familiar with the terminology in the Affordable Care Act and in the employer mandate rule. And so you still have some time. You have plenty of time to make sure you understand that and are familiar with the terminology. I would start brushing up on that now if you need to. Also, consider discussing this information with your payroll providers. They can be another good resource in collecting some of the information, like who's full-time, who's part-time, when did an employee start, things like that. And so they're another good resource. Also, be aware that the IRS is not changing rules, but they are still releasing clarification on certain rules regarding the reporting. For example, reporting about COBRA coverage regarding former employees is treated differently than reporting about COBRA coverage for current employees who experienced a reduction in hours. And so just know that more tidbits of information are still flowing our way, and so just keep an eye and an ear out for that. And then lastly, just included, this is a little chart the IRS has put out about helpful tips on what information you'll need for each form. There are additional resources, frequently asked questions, etc., on the IRS website, irs.gov. And so that's another resource you can use to get more information. Maybe they have your question up there already and a nice answer from the IRS. And so take a look at that resource. With that, thank you very much. I appreciate your time and attention. And I will turn it back over to Kelly to close out the webinar.
Thank you so much. So can everybody see my screen here? Let's see, show my screen. Okay. Caitlin, can you see that?
Yep.
Okay. Now this is the system that we use, Employee Navigator, for every single client. They have access to use this at no cost. And even if you don't know we're using it on your behalf. But what we've done is added a couple of upgrades, and in particular for today's discussion is the ACA dashboard and tracker. So we have the ability to manage variable employees. What we have to do is, here's kind of a step-by-step guide. Everybody has access to this too. There's an introduction that explains what the tool is for, and you can read more about it. Then we need to define employee classes. We've probably already done that for you. Set measurement periods. We use as a standard a 12-month if you have variable employees where you don't know if they're full or part-time, but you need to measure them. We use a 12-month measurement period and then a 12-month stability period. That's what we recommend. And then you would just, if we don't already have you in our BenAdmin system, we would just import all the employees. There's a template to import them. And then we'll have to categorize them. Are they salaried or hourly? Are they full-time eligible, variable, or part-time ineligible? And then we would audit the employee income. We need to make sure that it's affordable, and so you'll see in just a minute how we do that. That means what we're gonna have to do in our system, since we don't do payroll, is we use the rate of pay safe harbor. So we're going to import the rate of pay and the hours for everyone, and we'll be able to look at everything that way. Then we're going to add the medical plans. In our case, if we're not doing full admin, when we're just doing ACA reporting, then we'll just put in the lowest cost plan. If you have multiple plans, we're still going to indicate what the lowest cost plan is. And then we're going to need to go through and import our medical elections. If we're managing it day by day, month by month, we don't have to import anything. But if we aren't, then we will have to import them. And then we can manage the hours and import the hours every month or every quarter or at the end of the year. What I'd like to recommend for my clients is that let's do a test in July. Let's all talk about this now and see how this system works. Let's see what your payroll provider can do and figure out what is going to work best for you. Once we get everybody in there, then we're going to need to go through and make sure everybody's categorized correctly. So Sally Smith, we didn't indicate, is she full or part-time, or do we not know? If she's variable hour, then she's going to be put on that look-back stability period, measurement stability period. Or if she's full-time, then she's just going to wind up on the report. And then on managing the hours, you can see that on this one, I did import all of the hours for 2014. So we could see if this group is subject to the reporting or not. And I think there's several people on this call that I sent you the import template. So just throw all your hours at me, and then we'll put it in here, and then we'll know that whether we can see month by month how many total employees, full-time equivalents, and so on, so that we can get to your FTE count and know whether or not we're going to need to file for 2015. Once that is done, then we're going to be able to assign the ACA plan. So we're going to go, you can use the system to track whether or not this is the plan that you're going to offer to variable hour employees. Once we get the rates of pay in there, select the lowest cost plan, then we can audit it. In this case, everybody met the affordability based on the rates of pay. And whenever we did your renewal, we advised you to have a contribution to meet affordability. But this way we'll be able to track it, and if we need to make any changes, we can. And then at the end of the day, this system will be able to go through and calculate who was enrolled each month, and we will map these to the codes that Caitlin talked about before, and that some of these people are in measurement periods. Like this lady right here, she's probably, we measured her and she didn't meet the hours, so she was ineligible. So she's going to end up on the report like that. And then here, this lady, she doesn't even work there yet. So all of these are going to be mapped to codes so that we can provide this report to you. Again, the first step, make sure you're really considered an applicable large employer, and then we'll go from there, building out the plans, setting up the rules, importing and classifying employees, and bringing in the hours. And then if we need to request enrollment from the carrier, we'll have to request that and import that too. It's pretty simple. You just kind of, like in this case, you can see these are all the imports that I did to put in the census and the enrollments, and here are all the templates. So I sent you guys some templates. And then what would happen is if after we get everything in there, and I'd like to do it mid-year. I don't want to be doing all this in January for everybody, and I don't think you do either. Then we're going to commit the ACA data, and then we're going to have kind of a draft report where HR can go in and override any data, like change codes, fix errors or addresses, anything like that. And then we'll have 1095 ready data. We plan on e-filing for you. There's a charge for that I will have to pass through. It's not very much. Or if you want to just take your data, I'll just give it to you, and you can use a third party. Or I can just give you PDFs, and you can just do it all on paper. But what we're going to do in order to implement all this is I have some videos and training for clients, and so that we will be able to work together to get this done. So that being said, that wraps it up. All the rest of the discussions will be one-on-one with the most important people in the world, my clients, the people who make jobs and make the economy go. So thank you guys. I appreciate your time today. Please call or email. I will be sending you the slides, and there will be a copy of this recording on our YouTube channel, the More Benefits YouTube channel. Thank you guys so much. Bye.